you see the data setup, 19400 call has a very strong base, and the Nifty seems to be respecting that for now. Similarly, 44,000 has a very, on Bank Nifty, has a very strong base for call and put both. So I think this is the pivotal range for Bank Nifty, at least, up until tomorrow, give or take about 200 250 odd points. Nifty also very similar. If we sustain above 19400 450 for, let's say, half a day, then you could see some kind of short covering, and 19550 the resistance zone will come into play, but doesn't seem to be on the cards right now. But on the positive side, not everything's gloomy, even though the screen is red, even by marginal points. This doesn't feel so bad, right? I mean, as an investor, as a trader, this market, even if it's in a range or slightly negative, doesn't feel so bad, because the small cap and the mid cap are doing phenomenally well. And the kind of stock specific action we are seeing is extremely optimistic, extremely encouraging. So I don't think anyone's complaining just now, except for Nifty, Bank Nifty. Call and put buyers, the sellers are also happy in a market like this. So there's a very small segment of traders in the market who's perhaps feeling the pain. Otherwise, I don't think this is such a bad market.
Hi Kush, good morning. Nice to have you back on our show. Help us understand, I think next week seems to be a slightly more action-packed week for the markets, because 29th August is when the SEBI hearing at Supreme Court on the Adani Hindenburg saga is likely to happen. And then 31st March is when the government is likely to announce the Q1 GDP growth numbers. So what should be the strategy of investors this week?
It's actually very good to be back. I genuinely enjoy our conversations, right? I think the Adani saga is probably done and dusted, right? It's now a mere formality for the report to come out, and any kind of outcomes to be discussed. Along the way they've been discussing what the story is like. Even if you look at the stocks, right? This seemed extremely volatile when the entire Hindenburg news came out, and they weren't really in flavor. In fact, for the last month and a half, that's changed completely. A lot of them have gone steady, and the rest of them have actually been quite positive. Even Adani Enterprises, the big boy FIC, for the last 2 sessions, it's finally crossed over its 200-day moving average after that whole debacle sort of started or came in, which was late Jan, early Feb. So after a good 4 or 5 months, 200-day moving average being crossed itself is a sign that slowly, steadily, gradually the stock's actually picking up. And some of the other names like ports and power have actually done phenomenally well. So I don't think there is going to be too much that will come out of that report, and we'll see any kind of adverse action on the stocks in any way. So maybe it's just an event, and someone would want to be a little watchful on these. But otherwise, I don't see anything major coming out of that. GDP number, yes. Everyone's expecting, like a positive or an inline kind of a number. If there is any kind of a negative surprise, that's when the markets will perhaps react a little bit. But I think on the indices, there isn't, much action happening anyway. So, it will not be, a too detrimental scenario on the indices front, given that, we are trading in that tight range. Also, I look for the levels, more so than the data right now. For me, the action is in the broader markets, and I'll stick to that.
Okay, and what about broader markets getting impacted by what is happening in the world? So US inflation and China's deflation, of course, being critical concerns that are bound to have some sort of an impact on Indian broader markets, even if our data comes in line with the growth expectations. So is that likely to play some sort of a party pooper for us?
Well, where's the impact? I mean, we knew the US banks are going to get downgraded, and that happened. Look at what's happening at our banking sector. PSU banks were in the flavor, last week. This time around, private banks are picking up, barring HDFC, for the moment. So, where's the impact? If I talk about China, in particular, the deflation story, the moment it, the news broke out, rather, we saw a bit of an impact in, the metal stocks, but the markets seem to be forgetting all these things rather fast, or maybe taking it in their stride is more like it. Because you look at the likes of Tata Steel, Hindalco, JSW Steel, most of these stocks are back, to the levels where the downfall actually began once the news broke out. So decoupling is a very often used, cliche word. But right now, at least, we are seeing some signs of decoupling, at least in the broader markets, if not on the indices. So there might be some impact on the headline indices, but both the news, as far as the US action goes or the China action goes, doesn't seem to be playing out in the near term, and that is where I take some heart. Also, let me mention one more thing here. if you look at the FII data, they've been sellers consistently for the past 5 weeks now, and we track this data very actively from expiry to expiry. So for the past 4 expiries, I think even tomorrow, once the data is set, I think we'll have a negative figure. The markets are doing rather well, given that the FIs have still been net sellers. So taking heart from all this, the fact that the Indian markets seem to be in a steady position is actually very encouraging. So I'd suggest don't be in a hurry to book profits or get out just because the indices are trading in a narrow band.
Okay, you mentioned Adani stocks are going to get rid of their high beta volatility. Talk to us about JFS, GeoFin, GeoFinancial. I don't know what to call it. It's gone by so many names, but this demerged entity listed as GeoFin in the trade-to-trade segment. We are seeing some volatility there, and volatility only on the downside. I believe this is because of passive funds shedding the JFS stock. But what happens after this 10-day hiatus is over?
Kush, you're muted. Yes.
Yeah, some buying will eventually come in. It's very difficult to predict at what level will that buying come in. And as a market strategist, the way I look at myself, I wouldn't venture into it as long as the the lower circuit is in place. I wouldn't go out and say, okay, tomorrow we'll probably hit an upper circuit. In fact, what I would do is I'll wait for that upper circuit to come in, probably miss for a day or two, and then enter. But I don't see a long-term issue with the stock. Definitely, and as you rightly put, the passive fund selling is on, and it will be for some time. So I'll let the stock settle. But once it settles, and I think it should settle somewhere close to 180 odd levels. But that's just my calculation. Once it settles around that level, I would actually look for buying opportunities. But more than the price, I will look at the the daily action. Once I see an upper circuit on this, as I said, I'll probably give it a miss for a day, just to confirm that yes, the selling is indeed over. I will actually start accumulating, but not from a near-term perspective. At least from a 6 to 12-month perspective is where I will, look to enter into geofinancial services.
All right, and we've also got on our stocks board two interesting stocks that we've picked up today. Not that they are much in news this morning, but I think it's important to discuss Titan's acquisition of CaratLane, Titan being on a buying spree. And as a result of that, we've seen for some reason the Titan stock is actually in the red this morning. What seems to be the reason there? I'll come to the second company subsequently.
Sure. So, look, the stock's actually been a stupendous wealth creator over years. And, if I look at the recent move, which is again, mid-March, the stock was languishing somewhere around 2,300 odd levels. And then it made a dash all the way to 3,200. So we've seen a good, 40% kind of a return on this in the last, few months itself. Now, from there, if we are at, 3050 kind of levels, this is at best what you'd call consolidation, right? So the stock has rebounded from, lower levels of 2900s, trading comfortably above its, key averages and the resistance zones of 3000. So for me, it's just a consolidation that's there on the stock. If I am a long-term investor, for me, Titan, Asian Paints, the likes of Bajaj Finance, most of these stocks actually are a buying opportunity on dips. So for me, this remains, a buy. As far as trading goes, sure, there is some sluggishness, the momentum's missing. So I'll probably not pick it, from a trading perspective right now. But if I'm looking at it from, again, 6 to 12 months kind of horizon, I would be, looking to buy these dips for targets of 3,300 plus, in the coming months.
Okay.
And we want to discuss the CaratLane story in detail, and we will do that. But on the back of that news, there doesn't seem to be any sort of positive movement as far as the stock prices is concerned. Could you explain and help us understand why is that?
So again, I largely cover stocks from a derivative and a technical standpoint. So what kind of impact it's got on numbers is something that I wouldn't have on me readily. So perhaps I'd give that conversation a miss just now.
Sure, absolutely.
So let's move into IPO space. Very interestingly, Kush, news coming in of DOMS. In fact, this had come about 2 weeks back, 3 weeks back, and we had covered this story. But finally, the papers have been filed with the market regulator, SEBI, the draft red herring perspective. And there is likely to be a 1,200 crore IPO launch for DOMS. This of course comes on the back of fresh issue of about 350 crore rupees and OFS aggregating to about 850 crores. Out of this 850 crores, 800 crores is from the corporate promoter FILA, while individual promoters are going to shed 25 crore rupees each of their shares worth. Now, talk to us about the stationery market. DOMS, of course, we know has been a brand, a company that has taken pretty much the Indian stationery market by storm.
Absolutely.
It's a new entrant, and hence, you know, if we can go back to the stocks board, I had picked up one of the competitors, Cocoyo Camlin, which of course has been one of the only sort of, you know, listed stationery brands that we've seen. Remember, Luxor and Hindustan Pencils, which make Natraj and Apsara, are unlisted companies. So on the back of this, a stationery brand, 29-30% of market share, taken the entire stationery market by storm. How does one look at this IPO? What do you expect from here?
So again, you know, we've not started coverage on this one just yet, but what I can tell you from first-hand experience, you know, I've got 2 kids, and most of their stationery does, you know, indeed belong to DOMS. So yes, you know, just from a very layman perspective, looks like you know, a good market to, you know, be into, and perhaps, you know, good good response. It's just that I've not had a chance to see the valuations. If I talk about Cocoyo Camlin, the only listed player, as you mentioned, the stock's also gone into a bit of a sideways consolidation, positive bias. But yeah, I will, you know, wait for some more data to come in, and, you know, perhaps once we've got our coverage in place is when I'll be able to guide you, you know, through this a little better.
But yeah, I think interesting you mentioned your children. You look young, so I'm assuming your children are still using pencils and erasers and sharpeners, just like my daughter does. And you're right. I think it is fairly obvious. You go into a stationery store today, the entire variety available on display happens to be only DOMS. It's difficult to find a Natraj pencil or an Apsara pencil. It's DOMS, or it is the Chinese mechanical or sort of lead changing pencils available in the market. And going by that
I'm also surprised by your extensive knowledge of the stationery market, Karthik, at this point in time. Personal experience
I've got personal experience and vested interest there. But yeah, I think, you know, there's no doubt that DOMS has dominated the stationery market fairly extensively, and the quality is good. The pencil lid does not break when you sharpen. That used to be a very, very typical problem when we were growing up and using pencils every time, and the sharpeners fit well. The erasers erase well. So I think the quality has definitely been one of the reasons, and the price point has been similar to what we've seen in traditional products. So I think India's population growing, more children being born and going into school should continue to do well for DOMS, I believe.
Absolutely. And before we let you go, Kush, perhaps another bucket of stocks that you know, you briefly touched upon, and that is the Adani stock. I want to specifically talk about Adani Power. We're looking at some sort of profit booking there in the stock this morning.
Well, again, you know, look at the kind of run the stock's seen in the last 4 sessions alone. 280 is where it was on the 18th. You know, that is what, 3-4 sessions away. And from there all the way to 360. So the kind of run-up that we've seen does warrant some sort of profit booking. Even if I look at it technically, you know, on the RSI, on some of the other momentum indicators, the stock's very clearly gone into an overheated, overbought territory. In fact, it's a good thing that the stock seeing some profit booking creates an entry point for me somewhere close to 320 and 330 kind of zones. So I'm not at all surprised by this profit booking. But yes, this is one stock. You know, if you would have asked me to pick one stock out of the entire stable, Adani Power would have been my pick. In fact, it was one of our picks, you know, last week, and we'd recommended this to our advisory clients as well. So I will be, you know, a buyer in this somewhere close to 320, 330 kind of zones. The entire power pack is actually doing, you know, phenomenally well. No reason for this to not, you know, contribute. So for sure, look for, you know, a buying opportunity on dips. The profit booking today, or rather, you know, the slip from the highs, you know, this morning is just some profit booking that's come in, you know, after the stupendous run that we've seen in the last 3 to 4 sessions.
Since you mentioned power, Kush, I just wanted to pick your brains on a stock like Suzlon or any other renewable energy as well, because Prime Minister Modi late last night India time at the BRICS Leader Forum, Business Leaders Forum, had mentioned India's strength and India's renewed push towards green energy, hydrogen, renewable energy. Is that likely to give some sort of a fillip to renewable energy stocks this morning?
I'm glad you brought this up because I don't see this as just a 1 day or a 1 quarter kind of a trade. I see this as anywhere from a 3 to 5 year kind of a story. And since you've brought this up, I am extremely bullish on this entire space right now. About 2-3 years ago, when the entire defense story started, no one believed that these stocks could be the kind of multi-baggers that they are today. I think something similar can happen to the entire renewables green energy space. A case in point is Suzlon. Let me just share. Let me just take a minute and share with you. This was a stock that languished in those single digits for the longest time, and this was perhaps like a trader's a retail trader's dream. Okay, the stock's gone up to 10-12 rupees. Let's perhaps book some profits. But the recent move is so steady, so sharp, and so reliable. In the sense of that the volume and the price action, that this has actually become a stock which is there on the funds radar, on HNI's radar, and that is the kind of shift that we are seeing in the entire space.
All right, so I think renewable energy stocks there in radar, not just that of the leadership, the Prime Minister, but also I believe investors at this point in time, giving good returns for what the money is worth. Kush, appreciate you taking time out this morning. Thanks very much for joining in with your inputs. We will of course keep bringing you back as and when we can, but shifting focus to another interesting and important story that we are tracking, and that is by the way of Titan picking up over 27% stake in CaratLane with an investment of over 47,000 crore rupees. Joining us at this point in time to talk about that deal and what it means is Avnish Anand, who's also a co-founder at CaratLane. Avnish, thanks very much for taking time. Avnish, thanks very much for taking time. Good morning to you. I want to begin by asking, what are you making of this mega deal? The numbers are staggering. Have you made peace with these numbers just as yet?
It is definitely going to take some time to fully process all the, everything which has been covered in the news, right? All the changes, including the valuation and the transaction and the other changes which are happening in line with that. So I wouldn't say that I have fully processed it, but it's still going on.
Good morning, Avnish. It's wonderful to join you virtually this morning, and I see you are not in office, and I think it would have been a good day for you to be in office. And if you can cut to your full frame, I think we want to take the honor of being the first ones to play your Aston as CEO and co-founder. And congratulations on being named and designated as the CEO of CaratLane, of course a company that you co-founded and were an early employee of and continue to be with that. Tell me about the mood in office. What is the sort of rejoicing happening in office?
So actually, one by one, Karthik, I think it's actually my wife's birthday. So, man should not take any chances on your spouse's birthday, right? So this is why I'm at home. Coming to the other point, see, actually, there was a lot of rejoicing initially because of, it also kind of tells the whole world that how successful we have been, right? To get a valuation like this and to, for the change which Titan is going to make. The second part was that, because this also meant that Mithun was going to leave, there was a lot of sadness and anxiety because of that. Because people expect that there will be a lot of change, etc. But the good news is that one is that people feel relieved that there's going to be continuity. The company will continue to operate as an independent entity under the Titan umbrella. Plus, seeing a known face like me taking that responsibility also gave a lot of confidence to people. So now they are kind of happy once again, and we are back to focusing on business. So there was a little bit of a high and a low and then a high. So I think now people are kind of again.
All right.
I can't resist asking you, we'll come back to the mood in office, but the mood at home, what have you gifted your wife? Is it a CaratLane? Is it a Tanishq? Is it a Titan watch? Or is it an eyewear from the parent company? or a mixed basket of all of them?
Actually, I think she's already tired of all the CaratLane products because she's been getting it for the last 15 years almost, right, on every possible occasion. In fact, there is she kind of feels that I don't let her buy anything else other than CaratLane. So, in fact, it might be a good day to give her something other than CaratLane. I'm not going to tell you right now.
Would it be a Titan brand? Would it be a Tanishq?
I can't, like I said, it's still a surprise because my kids have to come back from school and give it to her.
Okay.
And definitely don't want to tell it on TV.
Absolutely, absolutely. Avnish, let's move on to the business side of things. You've built a very successful brand, CaratLane, essentially in a jewelry segment which goes and runs on touch and feel policy for the longest time until CaratLane changed the game. What is going to be your game plan for this new? And it's the same entity for you. It's just a change in management, not even a change in management for that matter, but henceforth, with Titan's perhaps greater involvement, what's going to be the action plan, game plan for you? Have you, sort of gone back to the drawing board and jotted something out just as yet, or is it too early?
Actually, see, nothing is going to change, honestly. The fact is that there has been this, acquisition of the remaining shares and moving on, but we already have a 5-year plan in place, which we have been, we are already in that 5-year cycle. So in terms of the plans, whether the financial or business plan, actually nothing changes. It definitely, allows us to find more areas of synergy with the parent entity. So that is anyway something which we have done in many parts of our business over the years, and we will continue to find more areas. But actually, people assume that there's going to be a big change in everything, but there's actually going to be no change, which people might find it hard to believe, but that's the reality. So in that sense, other than the fact that some people have made money and people are happy and so on and so forth, but in reality, nothing changes. So in that sense, there's no rethinking, resetting. We now want to work. We are working on the plan to get to 10,000 crores, and that's what the plan is, and everything is kind of working towards that.
Okay.
So some employees, of course, have made money. Others are likely to make money as well, because I think the extended, the balance 1.8% stake is likely to be picked up for anything between 340 to 380 crores as per reports. But Avnish, I want to understand from you, what is the kind of change in pressure when it comes to being part of a large conglomerate like Titan? And this, of course, one of the favorite stocks of even late Rakesh Jhunjhunwala. All eyes on every Tata company, and Titan, of course, being a company that every stockbroker out there advises a buy call on. And in fact, we were speaking to Kush just a few minutes back, and he also said that Titan is always a buy call for him. Now, apart from, from everything else being normal and business as usual, there is bound to be this added pressure of being part of a listed company and reporting audited figures quarter on quarter, every 6 months, every year, and being focused on, come what may, meeting those growth targets. Because if you don't, obviously the parent is likely to take a beating. So how does that pressure play out henceforth?
See, actually, Karthik, if you read the investor reports and the quarterly reports, there are always questions about CaratLane, which many of the analysts have been asking over the years. And I'm sure that somewhere it has always factored into somewhere in whichever minor and small way into the share price, etc. So it's always been there. But you're also right that going forward, because of the news, right, we have kind of always flown under the radar in that sense, right? Because people generally, we are not the kind of startup which makes, other than this current development, so much news, because we don't have a valuation story all the time or something other which generally catches the attention of the media.
Now so you have a valuation story at $2 billion, 17,000 crore rupees.
So now there is going to be definitely more attention from the media and the analysts, I would say. But the questions about financial performance and business performance have always been there, at least in the analyst community. I think the media community will possibly ask more questions. But, in terms of the performance, actually nothing changes. There has always been, Titan as a brand has always been very performance driven, but the way they do it very well is that they do the short term as well as the long term things really well, which is why it's such a darling of all kinds of stock investors. So I think there will be a little more attention because of that story, that people will pay more attention and talk more about it. But fundamentally, nothing changes over there as well, because it's already, like CaratLane is something which always gets questions in all of these forums. So from that point of view, I think there won't be a lot of change. I think consumers and the regular retail investors will possibly want to follow more on what's going on, I think.
Right.
And while we want to follow that, do give us some headlines, Avnish. Your 1-year horizon, 3-year horizon, 5-year horizon.
What's
What
the
is that
plan
looking
like for the
The
next
path,
couple
like
of
I
years?
said, is that we are on the path to going and becoming a 10,000 crore company. That's the next milestone which we have. As far as if I talk to you in terms of financial performance, and obviously making sure that the P&L health and everything also just keeps getting better like it has over the last 5 years. In terms of our business thing, see, one important shift we are making in our business is that we want to move from a product focused company where the focus is only on the jewelry to become a solution focused company. And we have already started that path. In fact, if you go down to our new Indranagar store, which is our biggest store, you will really get to see what lies in store for the consumer going forward. A lot of new experiences which we're trying to create to make sure that we don't give you just the jewelry, but all the other experiential services which you need to make that occasion truly special for you. So that's in a way the business direction for the consumer. As far as the financial thing, I already mentioned that our next plan is to get to 10,000 crores and everything is geared towards that.
Okay. Are we going to see more retail stores coming up, Avnish? Now that we are
Yes,
out
yeah,
of
actually opened
pandemic,
eight-
there's been a focus on more, as I said, jewelry being a touch and feel product where people want to see what they're buying. I know CaratLane has made an exception to that and has been a successful company at that. But would you be opening up more retail stores now?
Actually, we opened 85 last year, and we want to open similar numbers this year, and at least the next 3-4 years going forward. Because based on our digital data, we know lots of pockets where there is very strong demand for the product, but where we don't have stores. So that is definitely going to happen, and that's one key lever of growth for us going forward to make sure that we use the omni-channel framework to maximize this demand which we have created.
Okay.
And we're going into smaller and smaller towns. I can give you
Could you
names
name
like
those towns for us?
we have gone into Tirunelveli and Kangra and Vapi and all of these very, very small places.
Does that mean demand is coming from down south more than up north?
No, it's not coming from down south. Tirunelveli is definitely down south, but Vapi is in the western part of the country. Kangra is in the north. Muzaffarpur is in the east. So it's coming from all over. I was trying to give you an example of smaller towns. Typically, you would not expect, like a contemporary jewelry design company to have so much demand in these places. But these are all places where we are getting a lot of demand. Also, unlike the popular opinion, right, that it's only a young person's product, we get a lot of buyers who are, in their 40s, 50s, 60s as well. So I think there is universal demand in that sense for this kind of jewelry. Which is why, whether it's not just in the urban locations anymore, it's really getting into the heart of this country.
And this 10,000 crore rupee target that you have, Avnish, how much of that is likely to come from online channels as opposed to offline channels and walk-ins into stores?
See, Karthik, actually we stopped looking at the business like that a few years back. We only look at the business in terms of pin codes and catchments in cities. So I can only tell you that, so the top 500 pin codes obviously give us more than 60% of our business. I can tell you that the share of business from smaller towns will only keep increasing because that's where the store density and the marketing actions, etc., are going to take place more and more as we go forward. But the way we do our business is that, the digital part plays a big role in creating desire and pushing people into the right channels for purchase. But most of the transactions actually happen in the stores. But that's the way the whole omni-channel journey is designed. And actually, 90% of the people who buy in the stores also have browsed in the previous 30-day window. So that's the way our entire omni-channel stack is designed. So we don't look at it as an online and an offline or, in terms of the revenue or the P&L. But they have a complementary role to play into making sure that right from desire creation to transaction and post-sales experience, they kind of work hand in glove.
Okay. Avnish, before we let you go, perhaps our final question for you. You briefly touched on how there will be a possibility of a greater synergy with Titan. What synergies are we looking at?
See, we already have great synergies on the brand, on supply, on retail, on franchising networks. But there is a possibility for greater synergy in terms of people movement also possibly. And there are other areas on the supply chain side which are possible. So in that sense, and this is more 20,000 feet statement, but getting into the actual details of those areas are things which we have to go and figure out more. It's not that it's not happened in the past, but in the sense that now we are kind of going into more and more areas to see how we can make that happen. It also because of this, as you scale up, right, you kind of start facing new challenges. To address those new challenges, you need to find new solutions. So it's not just because of the purchase of the stake. It's also because of the size and scale of the business and where we are in our journey, that we are seeking more places and more areas of synergy. Once your size of the business goes to a different level, the size of the partner network, your manufacturing also changes. And Titan having done this at scale, right, all these years. So there's a lot of scale learning which will happen right now, which could happen across the board, whether it is from people, supply chain, retail, everywhere. Because I don't think there's any consumer company which has solved the scale problem better than Titan. So I think the learnings of scale are the most important area of synergy going forward.
All right, Avnish, thanks very much for joining in. We will let you be and hopefully have a great blast at your home as you celebrate your wife's birthday. Thanks very much for taking time out this morning.
Thank you so much. My pleasure.
That, of course, was Avnish Anand, CEO and co-founder of CaratLane, talking exclusively to News 9 at this point in time. Let's shift focus. Prime Minister Modi is in Joburg. He is attending BRICS summit and he is making some exemplary statements that talk about India's growth potential, India being the growth engine for the world economy, also pegging that we are going to be a $5 trillion economy very soon, Karthik, in line with expectations.
Honestly, in line with expectations. Nothing new Modi is doing at Joburg, what he does the best. I mean, he's a great orator, he's a public figure, he's a statesman, and taking the audience and playing to the gallery, to the mood of the audience is something that Modi excels at. Rightly so, India also is at that cusp right now where we want to break into the league of the top 3 economies of the world by the end of this decade. So a $5 trillion dream is something that we've all been dreaming for the last many years. In fact, 2017, 2018 is when this 5 trillion figure came out for the first time. And we were to have been a $5 trillion economy already, except that there was COVID and there was a reduced growth and there were constraints on the supply side, which got augmented. And right now we are at about 3.7 trillion or so. So if we continue to grow at about 7.6% or so over the next few years, we are likely to be a $5 trillion economy. I think the headline that really comes out of the BRICS summit, of the forum, is the fact that there's a hard sales pitch that Modi is trying to make to his counterpart state leaders attending the BRICS summit. And I think one story that he's really trying to hard sell is the UPI story, stating very well that UPI is already on the verge of acceptance in countries like UAE, Singapore, and even France. So UPI is something that India could export to the world. In addition to that, I think this renewed focus on manufacturing, telling the world that manufacturing competitiveness is something that India has arrived at and is something that that India can proudly boast of because of the reduced logistics cost. This is the second story coming out of Modi's address last night, India time, at Johannesburg. Add to that, of course, the fact that GST and IBC both have been fairly robust reforms that India has been able to make under Prime Minister Modi's leadership. And this Modi stated yesterday in his address that this has given investors the confidence to actually park their investments here in India and continue to grow them. So those are some of the headlines coming out of what Prime Minister Modi said at Johannesburg yesterday. But I think let's try and listen in if we can have an excerpt of that address yesterday. Let's try and play that out.
वैश्विक अर्थव्यवस्था में उथल-पुथल के बावजूद भारत आज विश्व की फास्टेस्ट ग्रोइंग मेजर इकोनॉमी है। जल्द ही भारत $5 ट्रिलियन इकोनॉमी बन जाएगा। इस बात में कोई संदेह नहीं कि आने वाले वर्षों में भारत विश्व का ग्रोथ इंजन होगा। ये इसलिए है क्योंकि भारत ने आपदा और मुश्किलों के समय को आर्थिक सुधार के अवसर में परिवर्तित किया। पिछले कुछ वर्षों में हमने मिशन मोड में जो रिफॉर्म्स किए हैं उनसे भारत में ईज ऑफ डूइंग बिजनेस में लगातार बढ़ोतरी हुई है। हमने कंप्लायंस बर्डन को कम किया है, रेड टेप को हटाकर रेड कारपेट बिछा रहे हैं। जीएसटी और इंसॉल्वेंसी एंड बैंक्रप्सी कोड के लागू होने से इन्वेस्टर कॉन्फिडेंस बढ़ा है। रक्षा और अंतरिक्ष जैसे क्षेत्र जिनको प्रतिबंधित माना जाता था, आज प्राइवेट सेक्टर के लिए खोल दिए गए।
All right, that of course is the Prime Minister speaking at BRICS Summit, talking about how government has rolled out a red carpet, has done away with red tapeism. Also, in fact, talking about, as you mentioned, successes of the Modi government, GST being one, the new insolvency bankruptcy code being another, and all of that reflective, of course, in our growth numbers. The last financial year, which is financial year 23, the overall growth came in at about 7.3%, surprising a lot of people. Many are now predicting that the first quarter of this financial year, in fact, has been stellar. Growth could be over 8%. Let's quickly get in my colleague Amit Ranjan into this conversation. Amit will also, of course, briefly touch on what the SBI report has to say. The SBI report pegging India's growth in the first quarter of this financial year at over 8%. That, of course, is good news.
8.3%, and they have got something known as the artificial neural network, which takes 30 indicators to arrive at these figures. I believe a lot of artificial intelligence and algorithms are going into that. Yeah, but that is on the back of a lot of jump in capex this year, which is at close to 3 lakh crores for the first quarter, and they are looking at 10 lakh crore figure for the whole year, which will be the biggest. It is a 63% jump from last year in June itself. So, capacity utilization was a problem. We were in the 70% range. We have to go above 80, and government is taking that seriously. If that happens with this, and some of the states are following suit, the corporate indices are very good this year, so that will also add up. So 8.3 is good for this first quarter, but they have also said this is last quarter also 22 it was 13.1%. So there's some 13.1% the growth. This time it is 8.3.
Okay.
I believe the April-June quarter, which is the first quarter of every financial year post budget, has something where the jumps happen. Probably Karthik may be able to clear that out.
So, I think numbers, of course, we will get to know the real numbers as they come out on the 31st of August.
Yes.
And
Yes.
31st of August is when we'll actually get the growth figure. But, 8.3, of course, seems a bit of an over-optimistic number, if you ask me. CapEx investments are happening. CapEx investments, incidentally, are happening in states which are going to elections this year. So, I think some sort of job creation and showing some uptake in investments by way of state GDP growth is something that is incumbent on states which are going in elections this year. But 8.3%, well, I mean, if it happens, great, it's going to be good news. Juxtapose it against, let's say, IMF projecting India to grow at 7.1%. A delta of 120 basis points seems a little too high. Not that IMF or World Bank have got it right every time, but there hasn't been such a major mismatch between numbers. So, if this number comes out, again, we have to remember these numbers will come on the back of CapEx investments.
Right, but given that IMF is projecting at over 7% for the entire financial year, and this is solely for the first quarter, second quarter it could come down, and subsequently, could that delta then be narrowed?
Is saying that, you're right. So the Ecowrap report is actually saying that for the whole year, growth would come at about 6.5%, right? I was just coming to that. So 6.5%, excess of 6.5% for the year, where 8.3% coming from the first quarter itself suggests that there is going to be a much lower than 6.5% growth for the subsequent 3 quarters, for the number to average out to about 6.5 and nearabouts.
6 in the next one.
Yeah, so now I think what is important to note is that if this growth is coming on the back of CapEx investments and CapEx investments only, we still have a long way to catch up when we talk about our own consumption story picking up. And we have seen there are other indicators, let's say, auto industry, for example. 2 million cars have been sold in the first 6 months of this calendar year. So even if we were to sort of, divide it equally, the April to June quarter would have seen about 1 million cars sold and registered in India. So there is consumption happening, but is this consumption a holistic consumption, or is it only an urban India phenomena? And that brings to these fundamental questions about economic growth, that is the economic growth equitable? Is the economic growth balanced across all sections of society? And if that is not the case, then, just growth numbers by account of public infrastructure spending by government, state or central governments will add to the GDP number, but will not really add to equitable growth as the country deserves right now. Add to that the reduction in demand which we have seen and the massive inflation on food and vegetables. This is something which is going to, the high inflation came in the month of July, started in June and all of July. But Q2 numbers, when they come out, we are likely to see a much larger reduction in consumption. So even if government spending continues, and this government spending again is coming from the taxes paid by people like the three of us, the middle class of this country. So consumption, especially on essentials, food items, soaring. And if that seems to be the mood of the economy, then even these growth figures of 8% and upwards don't really cut it when it comes to the common man.
All right, so
it will show in the next quarter where the projections of the SBI is 6%, so way down.
Way down in the second
August
quarter.
Is what we should really wait for and see what was our real growth number.
Absolutely, absolutely. And since we talked about auto sales and the fact that auto numbers are doing well as far as India's consumption story is concerned, auto industry is in the news for the very first time since India's launched its own car safety, crash safety rating system. Bharat NCAP is here. It also means that auto companies will have to do a lot in order to live up to those higher ratings in future.
Totally, Shweta. So, Bharat NCAP has been in the making and has been something that should have hit Indian roads much earlier, right? There are these standards available globally. Japan has its own, US, Europe, all the advanced economies have their own crash testing mechanisms and ratings that they get. But we spoke to Shashank Srivastava, Executive Director, Senior Executive Officer at Maruti Suzuki yesterday on the show. And our questions really to him were around the fact that it doesn't make sense perhaps to have these ratings voluntarily available. I think it has to be a mandate. Every car that comes on Indian roads should come with this crash test safety rating, the Bharat NCAP rating. And that is when a consumer will be able to make an informed choice. Now, what Shashank Srivastava mentioned yesterday was that that there are enough and more safety mechanisms already in place across all models that Maruti Suzuki produces. Even though there are conflicting reports stating that many Maruti cars actually are in the bottom rung, especially the entry-level small hatchbacks are in the bottom rung of safety. But Shashank Srivastava yesterday denied those reports, and he said that there are enough and more safety mechanisms already in place. The news that came out of that interview yesterday was that voluntarily Maruti Suzuki has offered 3 cars as part of the 30 cars which have already volunteered the Bharat NCAP testing. There are 3 Maruti Suzuki cars which have been offered for that testing. This of course includes the bestseller Baleno. It includes the Vitara Brezza, and it includes, sorry, just give me a sec, I had noted it down. So there are these 3 cars. There's the Baleno, the Brezza, and the Grand Vitara. Right. So 3 cars from the Maruti stable have been offered out of that pack of 30. But I think there is definitely going to be increased pressure on automakers, rightly so, to add safety measures to be able to compete on the rating scale, which goes from 0 to 5. And that, of course, will include features and body type, material, better built vehicles, which are going to require more raw material, which is going to become expensive for cars, and that cost obviously will get passed on to consumers.
But we don't know whether that's going to happen in the near-term horizon. But of course, added work there for all these companies to live up to a new standards of rating system. You're right, it should not be voluntary. It is voluntary at this point in time.
It is voluntary, and 1st October is when the rating system kicks in.
Yes, Amit.
Broadly, with all companies looking at export markets, in the West, especially in Europe, all car makers advertise their safety standards and very creatively so.
Right.
So I believe India will have to catch up even if it is not mandatory.
Absolutely. And since we look at a variety of features before purchasing a car, perhaps next time we're also going to look at the NCAP ratings before we purchase that car. The safety of that car is extremely important. Bharat NCAP is finally here. But with that, it's a wrap on this bulletin. Thanks very much for watching.
इंजीनियरिंग कर रहे हैं, जो कि सभी लोग कर रहे हैं।